What's up, ladies and gentlemen? Welcome back to the channel. I hope you guys are well. So first and foremost, please excuse for my absence yesterday. I was not feeling too well, had to take a rest, but all good today. Now, um, yeah, welcome back to the channel. So in today's video, we're going to discuss price action out of the SPY and the Qs. We're going to review our Elliott wave cans. We're going to take a look at a couple of alternatives. One suggesting that is still going to consolidate to the downside, and the other one suggesting that we may resume to the uptrend. Now, before I dive into the analysis, you guys already know what to do. Give this video a thumbs up, subscribe to the channel, and hit that bell icon so you'll be notified when I upload the video. So in the SPY, we've seen consolidation for quite some time now. February the 4th to today, okay, we've been in sideways move. Now, many speculate that this is looking more like a bull flag, a bear flag, but so far we've been trading in what appears to be a triangle. Now, this is the bearish count in the SPY, and it's still suggesting that out of our correction from January the 4th, okay, we went down in three ways to the W. We then retraced in three ways to the X to the 618, and now we're looking for further downside in wave A, then bounce in B and down in C. Now, this will call for further downside in the SPY, which means that we may break. Our first warning sign will be a break below 443.98. Our next level to keep our eyes open for will be 427, and the confirmation will be a break below January the 24th. Now, diving down to the 15-minute time frame, let's take a look at this price action here coming out of the X wave. So coming out of the X wave, guys, I mean, many, we can count this as 5 waves, right? But for the sake of this alternate here, we're going to count this as a ABC, right? We have the A wave, we have the B wave, and we have the final C wave. So A, we have the B, and then we have our C wave here. We then proceeded to hold resistance at the 618, which came in at a 456.74 precisely. Okay, we then now have our first wave 1 to the downside. Okay, now this is looking a bit tricky. Okay, I'm looking at this in one way, although this is a bit extended, right? A bit of a larger wave too than one would like to see in a minute degree wave count. Okay, and that is the following. So the way I'm looking at this, guys, is that we bounced off from the $443 region. Okay, we made our first A wave, 3-wave pullback to the B wave, and now we're looking to make our 5 waves, right? 1, 2, 3, 4, and 5. Although this looks like a 3-wave progression, but it's nevertheless, when we zoom in down to the third or to the 5-minute time frame, we can dissect 5 waves, or at least the makings of 5 waves. So we have a range here to be looking for. All right, our range comes in between the 100% extension of wave A, okay, versus wave B. So we have the 786 and the 100%. As you can clearly see, we hit the 786 as our first target of resistance. Okay, I anticipate that we may see a push further up to give us some sort of fake, I say fake out, right, to make us believe that perhaps this is continuation to the upside. I wouldn't call a break of the A wave a confirmation just yet, and I'll show you guys in just a minute when I present the bullish case. So in the bearish case, say for instance we find resistance and we start heading on lower coming tomorrow or the next day. All right, this range between 453 and 452 should be our levels for the bears to defend, okay, and then see further price action to the downside, okay, in 5 waves to complete the third wave. So what is the target to the third wave down? Normally it'll be a 100% extension of this decline. So that'll mean that if we take an extension from the high wave 1 to the low wave 1, say for argument's sake, we go to the 100% extension. So a theoretical, okay, and I say theoretical because I'm taking a theoretical completion of wave C or wave 2 to the 100%. So that comes in at 439.67 right over here. So should we start seeing the markets roll over tomorrow and into this week, expect price action to be down 439, at which point it'll be a little bit more clear, right, that once we break this low of 443.98, it is expected that we see a bounce of 3 waves to the wave 4, and then we're going to take our wave down to the wave 5 of wave 8 completion. Then we get a 3-wave retracement to the B wave, and so on. So if this is the case, there's still a lot of work to do to the downside, and at which point we will have no choice but to start looking for plays that will take advantage, even the protection to the downside. Okay, so excuse, whoa, excuse me. Let me get some water over here. I do apologize for that. So looking at our SPY, our bullish case, okay, so it's a bit different, right? So our bullish case suggests that we still have an X wave and a W and a Y, all right? We have completed a complex correction. Now, look, let me take a step back here and explain to you guys. So we've been in a massive correction since November the 22nd. We have 3 waves down to the W, 3 waves up to the X, okay, and then we have 3 waves down to the Y. So the wave 4 of the higher degree came in at an appropriate 23 to 38.2% retracement. Now, this price action here has been extremely choppy and sloppy, to say the least. Okay, we've had the wave 1 in an ending diagonal. We have our wave 2 pullback, ABC. All right, we have our ABC pullback to a wave 2. Then we have 1, 2, 3, 4, and 5 to the third wave. Oh, excuse me. Anyway, so what we're looking at here, guys, in this price zone, in this price action here is a triangle, okay? One can argue that this is already a confirmation to the upside, right? Because we're about to break this high. As you see in post-market, we have 452.06. The high here is approximately 452.60. So we're about 2 points shy away from actually 452.06, and this is 452.69. Sorry, we're a decimal points away from breaking this high. So when I say that perhaps we shouldn't take this triangle as a do or die type of scenario, that if we break the B wave, this is a confirmation that the wave 4 has completed here. It's because the C wave in our alternate count, okay, can extend to the 100% extension, all right, to the 453, at which point we can see a rollover. But for now, the pattern plays out. So a confirmation to this wave count is a break above the third wave high at 458. If price action coming into this week starts breaking out, and also we got to see 5 waves, right? So far we see just the makings of maybe the 3 waves, or 1, 2, and 3 in the smaller degree, right? But if we start making 5 waves up, we take out these highs, then this count is confirmed, right? Wave 4 has been anchored here, and then we're off to the races. But for now, we're gonna keep this as a possibility that we may see this wave B being taken out. Then we're gonna roll over. All right. I mean, this could play out in many different ways, which is why we did nitpick at a little bit of plays here and there in the SPY and Facebook, but so far it's been extremely choppy that we've had to cut those out for, before it gets too ugly. So managing risk is pretty ideal. So I would probably use the SPY or the S&P 500 as our gauge to consider, because if we take a look at the Qs, guys, if we take a look at the Qs right now, the Qs are in a hot mess also, okay? Out of our January the 24th low, this is our bearish count. We've got 3 waves up, all right? We did close. We made our first wave down. We did close below what would be our wave 1 in the bullish count, right? We closed below it. So that invalidates this. Unlike in the SPY, let me take a look at SPY here. Unlike in the SPY, we did not, we just barely went below. We didn't even last any more than a minute down at invalidation, right? We just touched it and went right back up. So that's, this is appropriate. It's not that it's invalid. We didn't close below it. We didn't remain below it more than we would like to. But in the Qs, however, the Qs did remain and closed right below invalidation. So to me, the way we're looking at this is one of 2 ways, right? One or 2 possible ways. Either this is an ABC pullback to the wave 2, which comes in at the 50 to 61, just like in the SPY, and then we see a rollover. All right, this is A, B, and C. Then we see a rollover to the wave 3, or alternatively, I don't have that count here. It's in the other chart. Oh, sorry. Or okay, here we go. Or alternatively, right? We see. Come on, bro. It's here. My bad, guys. Sorry. It's been a long day for me. Here you go. Perfect. Or alternatively, this is an expanding triangle, right? an expanding triangle will look like this. So out of our January 24th high, we have our first wave 1, then 2, 3, 4. So there's overlap in this expanding triangle, which is valid. We're meeting the guidelines where wave 4 is bigger than wave 2, wave 3 is bigger than wave 1, and now wave 5 must be bigger than wave 3 in this expanding triangle. But a theoretical sort of, not theoretical, but I say a confirmation that this count would not be at play is at a break below the wave 2, right? We can't go beyond the territory of wave 2 in this case. So we can still play by this fact that perhaps this is the count, while we see a potential rollover to complete the wave 4 here, right? We see on the SPY the wave E come down, and then we go off on the wave 5. Mind you, this will be the wave 1, which will be the resumption to the uptrend, right? Wave 1, 2, 3, 4, and 5 in the intermediate degree. Okay. Otherwise, then we will have, see, this is not the case, right? We can't count this as our wave 4. All right, there's no way. So this count is not valid anymore. Why? Because we crossed beyond the wave 1, all right, and we stayed below it. So unlike in the SPY, we didn't, right? So for now, we're going to keep this in our back pocket because I don't think that's the case. I think this is more likely, or alternatively, we see price action head on lower. Okay, so that's what I'm saying. There's more clarity out of the SPY, ladies and gentlemen, that this might be the case where we see another leg lower to the wave E and then we go. Otherwise, we may get a pop over here. If we get a pop, we break this B wave. I'm not favoring that. I want to see lower price action. I want to see the E wave come down and retest this trend line. All right, because if we come up, we break this B, this just might be the wave C. Okay, so it's still tricky. We're still not out the woods yet. We will be out the woods once we break the high here on February the 2nd. All right, guys. So again, I hope this helps. Let me know if you have any questions. Leave your comments down below. We'd love to hear your feedback. And as always, thank you so much. Give me a thumbs up on this video. I'll see you guys tomorrow. Good luck and take care. Goodbye.